Good morning, it's Wednesday the 2nd of November. This is the Phoenix Blue Morning Update brought to you today by Tom Colley. Uh, Big day, big movements in the markets yesterday. We saw a big sell-off in the dollar. We saw a corresponding bullish move in the euro. We saw a risk-off scenario, money out of the equities markets going into safe havens, gold, Swissy, and the yen. A time for great caution. A lot of uncertainty brought about by what's been happening for the US presidential election. What seemed like a done deal in favour of Hillary Clinton is now very much up for grabs, potentially, or according to polls, which can't be trusted, but the whole thing means more uncertainty. So that's what we've seen reflected in the markets yesterday. Let's have a look at actual news events yesterday. Well, we had manufacturing PMI for the pound, which came in roughly on forecast. CAD gross domestic product the same. ISM manufacturing the same. The dairy price index in New Zealand came in with a really big number. So caused a nice bullish move on the New Zealand US dollar chart. Bank of Canada Governor Pollard spoke, didn't give us much. We then had more positive news for New Zealand on employment and unemployment. We had some negative news from Australia on building approvals, and then inflation expectations from the Kiwi. So the net result of yesterday was these were very much as expected. Bullish move on the Kiwi because of these positives here, and a further negative or bearish move on the Aussie overnight with these poor building approvals. This morning, 9:30 construction PMI for the pound. ADP non-farm employment change, which isn't the main non-farm employment change, but sometimes used as a heads up. Crude oil inventories, we're in crude at the moment, we'll be watching this. We're looking for a figure above the forecast to show that the crude oil inventories are higher than they were, meaning that there's more surplus, which will drive the price of oil down, which at this moment in time is the direction we're trading crude. 6 o'clock, big one, we've got the FOMC statement, confirmation of the federal funds rate. We don't expect any change. There is no press conference because of the election next week. We will be reading the statement, looking to see what sort of clues we can get towards the expected rate hike in December. Interesting thing to look for here is similar things as were said last November, when they were somewhat signalling, although it wasn't spotted to a great extent, a December rate hike. So any similarity in the text this year with last year, I'm sure will be grasped upon by traders to strengthen their opinion in favour of a funds rate next month after the election. Worth noting overnight tonight for tomorrow for the overnight session as far as Europe's concerned, a Japanese bank holiday and trade balance figures out of Australia. Okay, so let's have a look at the charts. Here we are. That's the big move we had down. We've already got a bearish movement really out of Friday following the FBI announcing that we're going to investigate Hillary Clinton's emails again. Yesterday we followed through and we're again bearish this morning. I think we're even more bearish than this. If the screen was live, these were taken half an hour ago or less. We're looking at 97.20 as being a critical level. We were expecting or are expecting the dollar to come down to this level and potentially hold at that level. With what's happened yesterday, we'll be more cautious on that view. We will predominantly not be looking to trade anything new for the remainder of this week. There's a lot of news out non-farm on Friday. So much out there. If you are trading, reduce your risk. But you are going to see what looks like great opportunities pass by. But that's trading. It's not about taking trades in isolation. It's about when they're high probability. When there's a lot of uncertainty in the market because of fundamental factors, then that probability diminishes. So we don't risk our capital, or we risk a lot more reduced capital, or we trade price action rather than limit orders, so that we are looking for a change, the market giving us an indication it's going to change direction before entering a trade, rather than picking a level at which we are looking for the market ahead of time to change direction. This is the euro, and it's blown through the first level through here. This looks more like a realistic level to stop for the stopping point of the euro, but the same rules apply. If you were trading the euro intraday long today, that wouldn't be a bad idea, assuming the dollar continues to fall as we anticipate. But any sorts of end-of-day trades, I would be very cautious with. Looking at the news events for any intraday trades as well, be on top of that. Over on the yen, well, the yen's pulled back as well. We've seen dollar weakness. We expect to see yen strength. We've got a risk-off scenario as well. Money coming out of the equities risk markets into the safe havens, one of which is the yen. It did hold back on, it has been sort of holding station quite well relative to the dollar. But whereas this level here, we were really keen to be trading, and we've been watching these sort of levels for weeks and weeks. Same rules will apply. We won't trade it in the normal style with a 40 pip limit order, simply because of the uncertainty. If we get price action, we may look at trading it if it correlates with the dollar index, doing the same, but then we will need to see price action on both before taking that trade, and even then potentially at reduced risk because of what lies ahead. Okay, over on the Aussie, we were long the Aussie yesterday. There was some overnight news yesterday on the Aussie which gave it a nice boost. We took profits somewhere near the top of here. We'd already taken first profits, moved a stop to break even, but as we saw the dollar beginning to move down, we took profits at about 80% towards our target, which turned out to be a good move, because overnight the negative data on the Aussie came out and that pulled back. Not so good for us on Euro Aussie. Yesterday we traded from about this level, or sorry, the day before yesterday. Price had come right down to here yesterday morning. We'd taken profits, stops were at break even, but price came all the way back and took us out of the stops and went beyond the high here. Now sitting on a level here. Remember, this is a 4-hour chart that I showed you yesterday, but we were really bearish, or really strongly onside this bearish move to the downside. What this really shows you what can happen in the markets. This is why you need always to be taking profits, moving your stops to break even quickly. I know when you've got a view, and we had got a view that this had the potential of being a reward to risk of 10 to 1 for a target way off the screen below here, and it's very tempting to hold on to your whole trade, but taking profits means when it does come back, we've got something in the bank. We've been stopped at break even. If we hadn't done that, we'd be sitting on a loss. Whereas as it is now, we've got a small profit. So caution always in these scenarios. Even when we are very much believing in a trade, or it looks like everything's lining up for it, we have to still use our rules, manage our risk, because events such as these often happen. One thing that's going in our favour at the moment is crude. We've got a couple of entries through here from 50, and we added in again at 49. The crude is right down at 46.50, and it's testing that level as we speak. The crude oil inventories will be critical on that, but as you can see, we've got two trades which we've had money off the table. That's our stop, so we've locked profit in from there and profit in from there. We're at a level that if that level's broken, then our downside trade will be invalidated. We will allow this one to run. That's the only thing we have in the market other than our long-standing cocoa trade, which is a long trade, which is less affected by the volatility that we're seeing in other markets. There is a knock-on effect if we, it should, in principle, dollar weakness should help a commodities trade on the upside. We didn't see that yesterday, but it's managed risk, so it's one thing that we will allow to run. The other thing that we've mentioned is the S&P, big sell-off here across all the US equities. We saw the FTSE selling off, we saw the DAX, we saw the Nikkei, and also other Far Eastern equities markets overnight. Will we see a break below here? I'm not sure, I don't know, but we're clearly back down at a level that this is a level we haven't seen since July. We will be watching this market. I think if we get a significant level broken here, there is potentially more downside before the election on uncertainty. But again, we'll be trading with caution because there is a volatility in the markets that we're uncomfortable with. It reduces the probability of the trades that we take. Okay guys, just another reminder that if you are interested in coming to our trading event, free trading event in London, 15th of November, pop on the website, go to the events page, leave us your details. Go to the contacts page, you can sign up for our emails there, or send us an email with any specific questions to info@Phoenix Blue. Okay, so caution out there. We've still got a lot of news to come. We've got non-farm on Friday. Bearing in mind we've got the Fed announcement overnight, and then we've got those US presidential elections causing some turmoil in the markets. Okay, nice to talk to you, and we'll speak to you again in the morning. Goodbye.